Joining us on Power Lunch, this is Bloomberg Quint and I'm Meera Dugal. Let's get you the headlines. The Sensex and the Nifty witnessed subdued trade for a second day. Mid-caps and small-caps outperform. Infosys and TCS will kickstart the fourth quarter earnings season today. Steady deal wins expected for both tech giants, but margin pressures remain. Jet Airways suspends long-haul flights outside India till Friday. Lessors ground another 10 planes over non-payment of dues. And the Supreme Court orders political parties to furnish details of all electoral bond donors to the Election Commission in sealed covers before the 30th of May. All right, all that coming up in the next half hour, but let's take a look at how markets are faring. Yatin is here with us as always. Afternoon, Yatin.
Good afternoon, Neera. And we are very flattish on the market. For the last 3 or 4 sessions, we have seen the markets do nothing. The advance decline ratio also is quite stable. At 2 advances, 2-3 decline, something which was the trend in the morning as well. In terms of gainers, we have heavyweights ITC as well as Cipla gaining in trade, 1.5% up for each of them. GAIL is also one of the top gainers in trade today with 3% gains coming in on decent volumes. What's not doing well in the marketplace is the likes of Bharti Airtel, Indiabulls Housing Finance, which has seen some run up, IOC and L&T. So select of these stocks have been quite weak in trade. In the mid-cap end of the market, where there is strength in trade today, we are looking at PC Jewelers. That stock is up 10%. Along with that, we have BHEL. That has seen some traction after many days, 4% up for that engineering major, 77 and counting for BHEL. And finally, we'll have a look at the new listing of yesterday, Rail Vikas Nigam Limited. That stock is also seeing some traction on huge volumes, 3.5% last time I checked up for Rail Vikas Nigam. The issue price is 19 rupees with a 50% discount. The retail investors, 19.7 is at where the stock is trading at this point in time.
All right, Yatin, thanks so much for that. Let's move on to earnings, which kick off in earnest today. 2 of the country's largest technology companies, TCS and Infosys, will kickstart the season. But before we get into specifics, what do analysts expect from the IT sector at large? Agam Vakil is standing by with a snapshot. Agam.
Oh, okay. So let's start off with what we can expect from the entire industry in general. And by the entire industry, I mean the big 5, which are part of the Nifty 50. But considering a majority of the revenues are garnered by these 5 companies, what I've done is I've taken an aggregate of the revenues for TCS, Infosys, Wipro, HCL Technologies, and Tech Mahindra. And based on that, we see a revenue expectation growth of around 0.9%. EBIT is likely to remain flat on account of many factors, which I will talk about eventually, and profits, of course, consequently could see less than about a 0.3% rise on a sequential basis. What are the factors that we are working with respect to the revenues as well as margins? Revenues, of course, have seen a steady deal flow for all the 5 companies coming through. Some very strong deals and some very large deals as well. So something that could play in favor of these companies. On the other hand, the reason why we're seeing some margins in operating margins is because of the fact that there has been firstly an uptick in people's costs. We've also seen higher subcontractor costs. Let's not forget the Indian rupee has appreciated to a certain extent, which could also work against operating margins for this particular quarter. But let's talk about TCS and Infosys then. And this is where we're expecting revenue growth, or top line, to be fairly steady for both these companies. So talk about dollar revenues. We're expecting an uptick of 2.1% for TCS and 2.6% growth seen sequentially for Infosys. In rupee terms, it's slightly different, where we could see revenues remain largely flat for something like an Infosys, but as long as your constant currency is right up there with respect to expectations of the analysts, it shouldn't be too much of a problem. However, there could be some challenges with respect to your earnings before interest and taxes, that is your operating profits, where we're expecting a downtick for Infosys, and that could have an impact for margins too. So if we can have that picture, TCS margins are expected to remain flat. On the other hand, Infosys margins are expected to come off quite substantially. And the reason behind is, of course, once again the increase in people costs. This is your profit forecast. For TCS, it would be a decline of around 1.5%. On a reported basis for Infosys, it's likely to see an up move of around 9.4%, but we must remember that in the previous quarter, the company had taken, or rather devalued, its assets on the block, which would include Panay and Skava, which is why, optically, it seems like it could be a significant up move for profits on the quarter, but on an adjusted basis, in line with TCS, we're expecting a 1.9% decline on a quarter-on-quarter basis for Infosys too. In terms of factors, what are we watching out for? Well, as far as TCS is concerned, it will once again be digital services, which is likely to drive sales and operating margins. Of course, we're also keeping an eye on client budgets and consequent spending, which of course matters much to not only TCS but Infosys too. And of course, besides that, we're also watching out for your margins, which with a target of around 26 to 28%, that is what the company will be looking at. As far as Infosys is concerned, the total contract value will be important, considering for the previous 2 quarters, it's actually averaged around $1.8 billion, and for this particular quarter, it'll be a tad higher. So that, of course, is a positive, also playing out in favor of the company. But it's about the guidance, and as far as your revenue growth guidance is concerned, we all know the company's put in a lot of investments, and because of that, its guidance is likely to be anywhere between 7 to 10%. It will be a 200 basis points range, but it'll be around that. And operating margins guidance, on the other hand, as at least some analysts are of the opinion that could be brought down to 21 to 23%. So these are some key areas that we're going to keep an eye on when it comes to TCS and Infosys. No fireworks expected in revenues, and perhaps some weakness in margins.
All right, thanks so much for that. Sun Pharma is transferring its domestic distribution business, earlier run by promoter-owned Aditya Medisales, to a wholly owned subsidiary. This is part of its efforts to allay investor concerns on corporate governance. But this business rejig will have a one-time impact on the company's earnings in the financial year gone by. Aman Kapadia is explaining to us why.
In a recent announcement to the exchange, Sun Pharma said its fourth quarter earnings may take a one-time hit. This is because of the transfer of its domestic distribution business from Aditya Medisales, owned by the promoters, to a wholly owned subsidiary of Sun Pharma. While the transition will occur in the first quarter of the current financial year, its impact will be on the financial results of the previous year, or to be more precise, the fourth quarter of FY19. So why will a future transition impact its current results? Amay Chalke, research analyst at HDFC Securities, said that it is because of pending inventory at Aditya Medisales. So the way this transaction will work is, Sun Pharma has sold drugs to Aditya Medisales, and that is reflected on its accounts. But at Aditya Medisales, the unsold drugs are lying as inventory. But now that the distribution business is getting transferred to Sun Pharma subsidiary, it has to take back that inventory. That will impact the fourth quarter revenue. Also, when the inventory is back on Sun Pharma's book, it must be recorded at the production cost, which will be lower than the price at which Sun Pharma sold drugs to Aditya Medisales, which means it will impact its profit. While the current figure of inventory with AML is not known, the promoter entity had an inventory of 1,136 crore at the end of March 2018. We reached out to Sun Pharma to get a sense of the inventory lying at the distributor, but the spokesperson said that they have nothing to add at this point in time.
All right, Aman, thanks so much for that. Jet Airways lessors have grounded another 10 aircraft, impacting its operations across the country. The airline has halted operations to the northeast and cancelled long-haul flights outside India as well. The Civil Aviation Ministry is now reviewing the situation and will take necessary steps to minimize passenger inconvenience. That's according to a tweet that was put out by Minister Suresh Prabhu. SpiceJet, on the other hand, is looking to lease another 16 aircraft after it was forced to ground its Boeing 737 MAX planes. The airline claims it will be able to fly on all routes once these planes have been registered in India. Somit Sarkar joining us with details and the implications of that. Somit.
So SpiceJet came out with this announcement in the morning on the exchanges that they have inducted nearly 16 new aircraft from the secondary market on lease. Now they are waiting for the approvals to come in for these aircraft, but they expect that the planes would join their fleet in the next 10 days. Now this new induction will support SpiceJet's international and domestic expansion plans. Now earlier, if you remember, SpiceJet had to ground nearly 8 aircraft due to the issues related to 737 MAX, and so this new inductions come in as a positive for the company, and you can clearly see that in the share price movement of the stock today. Now for the summer schedule, at least SpiceJet's domestic capacity is expected to grow by nearly 30%, and these new inductions will assure that kind of growth. Now also there's a high possibility that the lease rentals on these aircraft would be lower for SpiceJet, and that is because of the excess unused capacity available in the secondary market because of the groundings of jet planes. Now we know that Jet has grounded more than 4/5 of its capacity, and because of that excess capacity that is available in the secondary market, SpiceJet might have got a better deal from lessors for induction of these new aircrafts, and that's the reason the share prices have been moving up for SpiceJet in the last 2 days.
Samit, thanks so much for that. There's a wind of change blowing in the Indian two-wheeler space. Consistent performers like Hero MotoCorp and Royal Enfield finding their sales wavering. TVS Motor has also just about managed to hold on to its volumes. But Bajaj Auto, which had missed the bust over the last few years, is now playing catch-up. Yatin Mota is joining us with details of an analysis he's put out on this. Yatin.
Ira, if you look at FY19 end, especially post the festive season, we have seen Bajaj Auto do well versus its peers. In fact, they have clocked in double-digit volume growth in the month of March and the entire fourth quarter. More importantly, because of the sales momentum that Bajaj has seen in the last few months, we have seen an overall increase in market share for Bajaj Auto versus the market leaders, which were Hero MotoCorp as well as HMSI Honda. More importantly, Bajaj has dethroned, HMSI, which is Honda Motors, and gained the second position in terms of the motorcycle market, wherein the market share of Bajaj Auto has moved up by nearly 300 basis points to a level of 18.4%. However, if you look at Hero MotoCorp and Honda, both of these large players have lost nearly 100 basis points in market share on a year-on-year basis for FY19. More importantly, if you look at the smaller players, especially in the market share on an overall basis, including scooters, there also Bajaj Auto has been able to get better market share. Bajaj Auto's overall market share has improved by nearly 230 basis points as far as the entire two-wheeler industry is concerned, and this is thanks to the dwindling sales of the scooter segment. And in FY19, we have seen the overall scooter share decline on a year-on-year basis, and this has happened at least in the last 5-7 years, wherein the first time we have seen slowing scooter sales. Motorcycle and moped sales have been increasing on a year-on-year basis when you compare FY19 versus the levels of FY18, and the screen on your charts clearly shows that we have seen some slowdown in the scooter segment. What has also done better is Bajaj Auto post the festive season, and the graph on your screen will clearly show that how post November we have seen Bajaj Auto sales pick up significantly, wherein other players like Hero MotoCorp have seen decline in sales. TVS somehow has been able to hold on to sales, but Bajaj Auto is the one which has seen a consistent double-digit growth in the domestic market as far as the motorcycle business is concerned.
Yatin, thanks so much for that analysis. The Supreme Court has ordered a status quo on the Essar Steel insolvency case. The two-judge bench, headed by Justice Rohinton Nariman, has stopped ArcelorMittal from making the payment to Essar Steel lenders to take over the company. The Apex Court has directed the Bankruptcy Appellate Tribunal to decide on the appeals expeditiously. JSW Steel is among the bidders who have faced repeated delays in their attempts to buy stressed assets under the insolvency regime, and the company's joint managing director says the bidders cannot wait forever. In a conversation with Bloomberg News, Sheshagiri Rao points to the difficulty in keeping the funds ready indefinitely. PR Sanjay now joins us with the highlights of that conversation. Sanjay. What was his perspective?
This is the other side of bankruptcy procedures. So as Ikra rightly pointed out, at least 68% of the total cases has exceeded either 270 days, and some of the cases already exceeded 500 days limit. So this is really crazy. So what JSW Steel management is telling us that this is testing their holding power, because for any bidding, you'll have to arrange the fund and you'll have to hold the cash just indefinitely. So there's a borrowing cost attached to it, and this is the other side of how bidders are facing it. That they've already bought Monnet Tispat, and they have been waiting for Asian Colors, and they entered later for the Essar Steel race. But this is the other side, which clearly signaling how difficult it's going to be for the bidder side. Of course, there are other problems attached to bankruptcy, but this clearly signals a worrisome picture.
No, absolutely, and Arcelor will probably face the same concerns. Sanjay, thanks so much for that story. Let's move on to the NBFC space. Faced with a liquidity crunch and high borrowing costs in India, non-bank lenders are increasingly raising money through public bonds, but retail investors may not be completely aware of the risks they're taking on. Rananjoy Majumdar of Bloomberg News joins us with the details. Rananjoy, it's been going on for a while.
Yeah, hi, Ira, thanks. So what we're seeing is that public bond issues by NBFCs in FY19 was the highest in at least a decade. And what this means is that NBFCs are increasingly trying to attract more and more retail investors for their debt. And this is in the face of a continuing tight liquidity situation that they've been facing in the money market, where institutional investors like mutual funds are demanding very high interest rates to lend to them. And so there are really two big reasons for NBFCs to try and tap retail investors. One is to really diversify their sources of funding, rely less on banks and the institutional side. The other is that while in the past this channel seemed relatively expensive, now with institutional investors demanding very high interest rates, it looks a little bit relatively less expensive. Now, on the other hand, for retail investors, a lot of care should be taken in making these kind of investments. And they shouldn't just be swayed by the high coupon rates or what looks like a good rate of return that's on offer. So the starting point is definitely to look at the credit rating that NBFCs may have. But beyond that, retail investors need to pay attention to the quality of promoters and NBFC's track record, and also things like the kind of liquidity they may have access to, as well as factors like the kind of sectors that the NBFC may have exposure to in their loan book. So all of these factors need to be taken into consideration, and that can be a bit difficult for an individual investor to keep track of.
Absolutely. Rananjoy, thank you so much for joining us with those details. Meanwhile, lending to small businesses is growing at a faster pace in India as financial institutions increasingly try and tap into the credit gap that has existed for years. A report by TransUnion, CIBIL and SIDBI indicates over 19% growth in outstanding disbursements to micro, small and medium enterprises. But that's not all. They've also pointed out in the report that there is an increasing proportion of outstanding credit to the GVA, that's the gross value added generated by the SME sector, which could raise some red flags. Pallavi Nahata gives us some insights from that report.
Outstanding disbursements to MSMEs have grown at an annualized rate of 19.3% from December 2013 to December 2018. This was according to data by MSME Pulse by TransUnion, CIBIL and SIDBI. As per the report, lending intensity rose to 47.6% in December 2018 from 32.2% in December 2013. Lending intensity was measured by outstanding MSME loans as a percentage of gross value added by MSMEs and was particularly steep since December 2016. The report noted that this could be an indication of a buildup of stress in the segment and needs to be further monitored. According to the report, lending to individuals, who are often promoters of MSMEs, increased 9.7 percentage points from December 2013 to December 2018. Lending to entities rose 5.8 percentage points in the same duration. NPAs in the individuals category rose to 7.5% in December 2018 from 6% in December 2013. For entities, they stood at 10% in December 2018 from 7.75% in December 2013. The report said that the divergence could partly be explained by the divergent contribution of public sector banks to both segments. PSPs also dominated new-to-credit customer segments. As a percentage of the total borrower base, new-to-credit customers in the segment with loans of up to 10 lakh rupees grew from 9.7% in the second half of 2017 to 10.6% in the second half of 2018. The pickup may have been led by the Prime Minister Employment Generation Program and other central schemes that allow provision of collateral-free loans for all loans extended with a ticket size of less than 10 lakh rupees.
All right, let's move to the big political story this morning. The Supreme Court has asked all political parties to furnish details of all the electoral bonds issued by them to the Election Commission. The Apex Court, which is hearing a plea against the issuance of electoral bonds, passed an interim order today. Let's first go across to Arpan Chaturvedi, who sums up what happened in court today. Arpan.
That's right, Ida. So in its order, basically what the Supreme Court has said is that all the political parties will have to give details of the donors who've donated to them via electoral bonds. The petitioners during the arguments had sought that the court altogether puts a halt on the electoral bond scheme until the final hearing has happened and a judgment is passed, or in the alternate what they were seeking was that the details of the donors should be made public. So both the prayers in the interim what the petitioners were seeking have not been accepted. The stay has not been given, but the court has asked the political parties to give the details in a sealed cover. As far as what's the impact of this order, the petitioners say that they feel that this particular order will not have much of an impact because they say that the manner in which the electoral bond scheme has been made, it is possible for political parties to claim that they are not aware of the donor details because the electoral bonds do not carry any name, and therefore they say that as far as this particular order and in this context of these elections are concerned, they don't see it having any significant impact as far as their argument of anonymity over electoral funding process is concerned.
All right, Arpan, thanks so much for those details. Jagdeep Chokar, representing the Association for Democratic Reforms, the petitioner in the electoral bonds case, says the Supreme Court order will have limited impact, as Arpan also explained. He says political parties may argue that they themselves do not have the donor details that need to be furnished. Listen in.
इस निर्णय का इम्प्लीकेशन अभी फौरन तौर पे तो कुछ नहीं होगा, क्योंकि ये बिल्कुल संभव है कि पॉलिटिकल पार्टियां कहेंगी कि हमें तो ये बॉन्ड बाय पोस्ट आ गया है और उस पे ये तो लिखा नहीं था किसने भेजा है, तो हमें तो पता नहीं किसने भेजा है। तो अगर पॉलिटिकल पार्टियां ये कह देंगी तो फिर किसी को कुछ नहीं पता लगेगा। तो ये निर्णय देखने में तो लगता है कि शायद इसका कुछ असर हो, लेकिन वास्तव में इसका कोई असर होने वाला नहीं है। ये तो अगली हियरिंग के बाद ही कुछ होगा।
Right, joining us on the phone line from Bhopal is former Chief Election Commissioner Om Prakash Rawat. Good afternoon, Mr. Rawat. Thank you so much for taking the time to speak to us. Sir, what is your understanding of the interim decision by the Supreme Court? The general belief seems to be that it won't go very far in actually bringing transparency, which is what the Election Commission had wanted.
More or less, whatever Professor Jagdeep Chokar has said may come out to be the case. However, let us hope that this interim order of Honorable Supreme Court delivers something which is useful.
Mr. Rawat, from the Election Commission's point of view, since you know the functioning, it was the concern the immediate election as well as the broader picture of electoral bonds? Because if it is the immediate election, it may not go very far in terms of ensuring transparency of funding this time around.
Yeah, true, because the Election Commission had flagged all the issues regarding electoral bonds in their first letter as soon as this finance bill of 2017 was passed. And then when the scheme was notified in January 2018, again we had interaction with the Finance Ministry, and the Election Commission had flagged all the issues. But it emerged that they wanted us to see the functioning of electoral bond scheme and then revert. So after that, I think Election Commission has already submitted an affidavit to the Honorable Supreme Court. Maybe Honorable Supreme Court will deliberate on that and decide finally.
Mr. Rawat, could one consideration also have been that the voting process has already started? At this stage, if there were to be an abrupt, say, halt on electoral bonds, it could have disrupted the process as it's going to continue over the next 6 weeks. Could that have been a consideration?
it won't affect anything because most of the money via electoral bonds has already been given to the political parties. So if a stay is granted, then that stay would be applicable only to the future transactions. And I don't think for this election anybody is going to donate money now.
Okay. Mr. Rawat, two specific questions. One is that, as Mr. Chokar was also saying that, the political parties can argue that we don't have these details at State Bank of India, which I guess would have any details, if at all. So they can, what they get in sealed covers may be inadequate. Second question is that even if they get some actual material information in sealed covers, what is the purpose of that? It doesn't help anybody judge any conflict of interest or something like that which could come through.
We should have faith in Honorable Supreme Court because they must have deliberated and ordered this way. So whatever they have in their mind, they will definitely get that information out of the whole thing. However, as an outsider, not privy to all the happenings in the Honorable Supreme Court, I would tend to agree with Professor Jagdeep Chokar that nothing much of substance can be achieved through this information from political parties.
All right, Mr. Rawat, we'll leave it there. Thank you so much for your quick views
Thank you.
On the electoral bonds debate, which has seen an interim decision from the Supreme Court today. Let's move on. Railway component makers are sitting on substantial input tax credits as they pay 18% on inputs, while the tax on the finished product is capped at 5%. This has led to these players demanding a refund, but the GST Council has another plan to help them narrow this gap. Nico Jori tells us how.
The government is considering to give relief to railway component manufacturers as the industry is facing issues in utilizing the credit of tax paid on its input. Since GST was implemented, the industry is facing an inverted duty structure issue, which means that the taxes on its inputs are higher than the tax on its output. This leads to accumulation of credit of the tax paid on its input and in turn becomes a cost for the industry or these companies. So now the government plans to either give refund of the credit that has been accumulated or increase the tax on its output like bogies or wagons to 12% from 5% currently. The issue was discussed in several meetings of the GST Council, and the government had earlier thought of increasing the GST rate on the output to 18% from 5%, but then there were concerns raised that since there has been a lot of credit that has been accumulated over a period of time, it would lead to revenue loss for the government, since most of these companies would utilize this credit to pay their output liability. So now the government plans to either refund the credit or increase tax on their outputs from 5% to 12%.
All right, that's a wrap on this edition of Power Lunch. Thanks so much for watching. Lots more coming.